Hello everyone, this is Muniza and I welcome you all to my class. Today we will be having a discussion regarding IAS 40, that is International Accounting Standard number 40, Investment Property. My dear students, IAS 40 Investment Property deals with immovable, tangible, non-current assets. As we discussed in my previous lecture that there are two main categories of non-current assets, namely tangible non-current assets and intangible non-current assets. IAS 30 deals with intangible assets mainly, and IAS 16, property, plant and equipment, deals with the property, plant and equipment as a category of tangible non-current assets. And our today's topic, IAS 40, deals with immovable, tangible, non-current assets. So let us start our discussion by having a look at the definition of investment property, which is provided to us by IAS 40 itself. IAS 40 says that investment property is the property, land, buildings, or its part, or both, that is held to earn rentals or for capital appreciation or both. So IAS 40 deals with immovable tangible assets that can be used to earn rentals or capital appreciation, that is making money through the increase in prices in the real estate market or for both purposes. Please also focus that IAS 40 does not apply to the assets which are used for the production or supply of the goods or services. And it does not apply to the assets which are held for administrative purposes. Also, it does not apply to the assets which are held for sale in the ordinary course of the business. So you need to focus the purpose of the assets to establish that to which standard does they belong. If it is land and building used for rental purpose or capital appreciation or both, then IAS 40 deals with them. If they are used for production or supply of goods or services and administration purposes, then generally IAS 16, property, plant and equipment, applies. And if they are used for sale in the ordinary course of the business, then generally we do apply IAS 2. My dear listeners, the objective of IAS 40 is to prescribe an accounting treatment for investment property. Now, let us have a look at the recognition of investment property in the financial statements is dependent upon two conditions. Let us have a look on those conditions. IAS 40 generally says that we can recognize an investment property in our statement of financial position only when the given two conditions are met. If they are not being met, then we are not allowed by the standard to recognize them in our books of accounts. These two conditions are, number one, it is probable that the future economic benefits that are associated with the investment property will flow to the entity. And number two, costs of the investment must be reliably measurable. And you can observe that this rule is similar to the IAS 16 property, plant and equipment, which we discussed earlier. Now, let us have a look at the accounting treatment of investment property initially and subsequently. Initially means that when it is recognized in the financial statements for the first time. And subsequent measurement means that how are we going to measure it after the initial recognition of the investment property. My dear students, we do recognize investment property initially at its cost, which includes the purchase price and any cost directly attributable to the investment property. So all of the directly attributable expenditures, for example, any legal fees, etc., can be considered as a part of the cost. But you need to be careful that we do not include any startup costs unless they are directly attributable to investment property. And also we do not include any operating losses which were incurred before to the operation stage, and also any abnormal losses related to the material, labor, which is incurred at the development stage of the investment property. And also, you need to consider that up till here, the treatment regarding the initial measurement is the same as we did for IAS 16 property, plant and equipment. The cost will be measured in the cash and cash equivalents. So if for some reason the payment is deferred to any future date, then the cost will be considered as the discounted amount of the future value payment. Now let us have a look at the subsequent measurement of the investment property, that is after the first reporting period. IAS 40 allows us any of the two models given. Either we can adopt a cost model or we can adopt a fair value model. Under cost model, we measure the investment property at its cost, less accumulated depreciation and less any impairment losses. And you can consider that it is again the same as we did for IAS 16 property, plant and equipment. So initial measure and the cost model part of the subsequent measure is the same for both of the standard IAS 16 and IAS 40. Now let us have a look at the fair value model, and you need to be clear that fair value model used for IAS 40 is not the same as revaluation model used for IAS 16. There is a change in IAS 40. Under fair value model, the investment property shall be measured at fair value, and it means that the investment property shall be revalued at least at the end of the reporting period. And the rules for fair value measurement are present in IFRS 13, which we will be discussing later. Then obviously, if there are any gains or losses arising from the fair value change, we have to recognize them in our statement of profit or loss. How? We are going to discuss later in our lecture. You also need to consider that we are not going to charge any depreciation under fair value model, and this is a basic difference between IAS 16 and IAS 40. Now let us consider the accounting treatment under fair value model for investment property when there is a gain or loss on the investment property because of the fair value change. In the first scenario, when there is a gain on the investment property because of the fair value change, we have to consider this gain as a credit in our statement of profit or loss, and we will be debiting the investment property. This is the journal entry which we have to pass in the case of gain arising on the investment property because of the fair value change. And the second scenario deals when the loss is arising on the investment property because of the fair value change. In that case, obviously loss will be debited to our statement of profit or loss, and we will be crediting investment property, showing a decrease in our asset. This is a journal rule, debit and credit rule, which might be you are aware that whenever the asset value is decreasing, we have to credit it. So in the case of loss, we are going to debit the loss from fair value change recognized in our statement of profit or loss, and credit is going to be investment property, which is showing a decrease in the value of our asset. Now, in some cases, it happens that we are unable to measure the fair value of the investment property, and please keep this thing in your mind that this is very rare. This is very rare, that when we are not able to measure the fair value of our investment property. And excuse me, IAS 40 assumes that in most of the cases, we should be able to measure the fair value of the investment property reliably. But in the rare cases, when we are not able to measure the fair value, what shall we have to do? In that case, when we are not able to measure the fair value reliably, then IAS 40 prescribes different treatments on the basis of whether the property investment property is under construction or not. If the investment property is under construction and not yet completed, then we need to keep it at its cost until we can measure the fair value reliably or the construction is completed. Or on the other hand, if the construction is completed and we are not able to measure fair value still, then we need to keep it using cost model. And we are going to apply this cost model in the same way as we did for IAS 16. That is, cost less accumulated depreciation and any accumulated impairment losses. But you need to consider that this scenario is very rare when we are unable to measure fair value. But if it happens, then the standard allows us to consider these two scenarios as per the investment property under consideration or not. Now let us have a look at the transfer of the asset to or from the investment property, whether it is allowed or not. Whether you can transfer the asset to or from the investment property or not. The answer to the question is yes. You can do it, but only when there is a change in use. For example, you started using a building for your on use, which was previously given for rental, then obviously we should start using IAS 16 property, plant and equipment, because the conditions to recognize it as an investment property are not being met now. We are not using a particular asset for the capital appreciation or for rental purposes or for both. So because the conditions are not satisfied and the conditions for IAS 16 are now getting more satisfied, then obviously we have to transfer it to the property, plant and equipment. Now let us discuss at the derecognition of investment property from the financial statements. We can derecognize investment property from our financial statements in two cases, whether on disposal or when the investment property is permanently withdrawn from use. On disposal means that by sale or entering into the finance lease. Or on the other hand, when the investment property is permanently withdrawn from the use, it means that now the further economic benefits are not expected from the use of the investment property. When on the disposal of the investment property there is a gain or loss arising, we have to recognize it in our statement of profit or loss. And how are we going to determine the gain or loss on the disposal? We have to compare the net proceeds which we are gaining on the disposal to the carrying amount of the investment property at the disposal date. If the net proceeds which we are receiving at the time of sale of the investment property are more than the carrying amount of the investment property at the disposal date, it is a profit and we have to credit it in our statement of profit or loss. On the other hand, the net proceeds which we are receiving by the sale of an investment property are less than the carrying amount of the investment property, then it is a loss and we have to debit it in our statement of profit or loss. And in some cases, when proceeds are equal to the carrying amount of the investment property at the disposal date, then it is neither a profit nor loss and we are not going to consider it in our financial statements. We are simply going to ignore it. So my dear students, this is all for IAS 40 investment property. For practice material regarding IAS 40, you can just visit my YouTube channel. I hope you will be finding enough material regarding IAS 40 over there. And if you do have any questions, you are most welcome. You can just put your questions in the comment box below. And thank you so much for listening. Take care of yourself. Thanks once again.